Hi everyone, welcome to Finance Marketplace. This is one of the preliminary sections of this video. It first discusses what the terms of financial market and financial system means and how the financial system of a country is important and the number of elements of a financial system is related to each other and thus it support and claim the merit of systematic approach. Secondly, it discusses the functions of financial market. The financial markets mean any marketplace where the transactions of financial products occur. The financial markets are broad in scope and scale, which includes money market, fixed income market, forex market, commodities market, derivatives market, stock market, and the introduction and rising of cryptocurrency market in recent years. However, we broadly could categorize into two types of markets pertaining to its product range, that is money market and capital market. To effectively to function of these markets, the financial system must be in proper order. Before we move further, it is important to know what is it all about the financial system is. The financial system is built with two key elements: the set of licensed institution and the regulatory framework. The licensed institution within a financial system, which include commercial banks, investment banks, finance companies, leasing companies, primary dealer companies, insurance companies, fund management companies, stock brokering companies, money brokering companies, and foreign currency traders. The regulatory framework is setting the rules, regulations and type of transaction that are allowed to operate in financial system, and the system is closely supervised by the regulatory institutions, which is usually under the government purview. The regulatory entities would be the Central Bank of Sri Lanka, Securities Exchange Commission of Sri Lanka, Insurance Regulatory Commission of Sri Lanka in Sri Lankan context, and the framework might be differed to country. However, the principal concept would remain the same, which is to ensure the effectiveness and efficiency in the settlement process and asset allocation process of the financial market, while keeping the consumer protection intact. The system is permits and facilitate the exchange of funds one to another in different forms, either globally, regionally, locally or firm-specific institution subject to its listed terms and conditions. We'll discuss each of these products, services and settlement processes in future videos. In this video, let's talk more about the money markets and its related products. The money market means the marketplace where the short-term debt instruments trades in a more wholesale level. The majority of large-scale volume transactions that take place between financial institutions and companies. The companies who participate in the money market, especially with banks, primary dealer companies, and other financial institutions who lend and borrow funds in large scale between them pertaining to their requirement in the form of call money, term money, commercial papers, asset-backed securities, and treasury bills. Some of these large-scale transactions could eventually move into the hands of individual investors in a smaller scale through various investments, that is money market accounts, certificate of deposit, commercial papers, treasury bills, repos, asset-backed trust papers, or other alternative investments. In most of these situations, the money market instruments are considered to be high degree of safety and comparatively low returns. The money market as a whole is to be believed the mainstay of the global financial system. I would like to mention you that there will be a number of videos will be released in future which will discuss each of these products extensively. In this video, let's look at some of these products briefly. Fixed deposits mean the customer's money held with a bank or other financial institution, and this money will be deposited either into checking accounts, money market accounts, or certificate of deposit. Also, these deposits are generally categorized into two, that is demand deposit and term deposit. The demand deposit means the banks are required to return customers' money on their request, and term deposits mean the customers are expected to deposit for a specified time frame generally less than 1 year. However, customers are having the rights to draw down their deposit prematurely, subject to agreed terms and conditions. Asset-backed securities mean is a fixed income instrument created through a process known as securitization. This SPV, special purpose vehicle, is a legal entity which issues securities backed by the underlying assets, or generally called collateral, and the allocated assets cash flows are used to repay the capital and interest on to the holders of asset-backed securities. The money market account can be defined as type of savings account. In general, money market accounts are constituted with various types of underlying securities, including treasury bills, commercial papers, repurchase agreements, and mutual funds. Also, money market accounts offer fairly higher interest rate compared to the ordinary savings account, and financial institutions usually compute interest on a daily basis and credit the customer's account on a monthly basis. Commercial papers are mostly issued by corporates to finance their own cash flow requirements, which is short-term debt instruments less than 365 days of maturity and usually issued form of secured or unsecured with zero coupon interest payment, issued at a discounted price which matures to its face value. Treasury bill is a short-term debt instrument which is issued by the country's central bank through an auction using a competitive bidding process, and the debt obligation is backed by the government. Only primary dealers are allowed to participate in the bidding process. Generally, T-bills issued for 3, 6 and 12 months. However, its maturities can be varied for a few days or could go up to 365 days. The denominations would be usually be 1000 Sri Lankan rupee or could reach even for millions. Generally, longer the maturity, the higher the interest rate that investors are entitled. Widely regarded as one of the most secured investments, Treasury bond is a medium to long-term debt instrument which is issued by the country's central bank through an auction used in a competitive bidding process, and the debt obligation is backed by the government. Only primary dealers are allowed to participate in the bidding process. Generally, T-bonds issued for 2 to 15 years and could even go up to 25 years. The denomination would usually be 1000 Sri Lankan rupee or could reach even for millions. Generally, longer the maturity, the higher the interest rate that investors are entitled. Widely regarded as one of the most secured investments. Repurchase agreement is commonly known as repo, which is generally a short-term borrowing money market instrument. Treasury bills or treasury bonds are pledged to another party with an agreement to purchase them at a predetermined price on a future date. With this brief note, let me conclude this video, and in my next video I will discuss about the financial markets along with its financial products fairly comprehensively. Thank you so much for watching this video. I will see you in the next video. Thank you.